Right, so welcome back. This is Saturday. Today is Saturday, and I'm just gonna give you a brief outlook or forecast on what's gonna happen next week. Okay, next week is the CPI week. Right, as you can see right now, it is an ES chart. The price has reached into this balanced price range. I expect this level to act as resistance, and price should proceed lower from here. Okay, on the micro E-mini chart, on the weekly, we have tapped into the weekly fair value gap. Alright, because next week is the CPI, I gave the, how would you say it, I have some allowance of space for the price to reach into this area here, which is the weekly volume imbalance. Okay, the price can pump up to this level, right? It can wick through it, and then after which I expect a strong rejection from there. Okay, right here we have built in equal lows, right? It's more clear on the daily chart, but right now we're on a weekly, so we have equal lows down here. Retail is going to see it as support, right? And above this level here, we will be in premium of the current dealing range, so that's where I am looking to go short. So on the daily chart, it's pretty clear here that these are relative equal lows, and there's a low here as well. So what I'm expecting for next week would be that price be kept at this level. Okay, this level we have many reference points. Okay, you have a bearish order block, you have a breaker, and within this current balanced price range, above here is an inefficiency that price has yet to fill, and we have weekly volume imbalance as well. So a lot of confluence together, which is why I think it makes this area very sensitive. Okay, what I'm expecting next week will be something like this, right? I outlined it on the hourly chart. Something like this. Okay, on Monday there's no news drivers, the price would just chop and range around. Tuesday there is a news driver at 8, price might come down here to this level, or prior Monday will be at this level, or New York, the London kill zone on Tuesday, whatever it is, it's gonna come down here. We have this fair value gap and this huge order block right here, right? On the daily, we swiped, not swiped, but we purged the sell side, broke market structure to the upside, created this fair value gap and this order block. So I'm thinking this area is a area for a long into Wednesday and London session Thursday. Okay, so it's going to come back up, maybe get some retrace, some consolidation above here, or hit this low of the order block, come back down again, consolidate, and then on Wednesday it's going to be liquidity building for CPI, right? And CPI, it's going to go up. That's what I'm thinking first. It's going to go up, right? This is why the maximum I kept it as the weekly volume imbalance here, and then it's going to break down, right? Just like non-pump payrolls, right? It's going to go up, take out everyone who is shorting, and then break down. Okay, because why? There will be sell stops around this area and this area here. Retails will be long and they will throw their stop loss here. Alright, so it's going to take out all the sell stops, and then it's going to make another leg down during the PM session or whatsoever, right? It will be targeting the daily equal lows. Okay, on Friday it will be a continuation down. So I think next week we should see the expansion of this entire consolidation range on the daily. All right, that is what I'm anticipating. Okay, this is highly inaccurate. I must say this first because I do not have Monday's data yet. I need Monday's data to forecast forward what's going to happen the next day, and like what I did this week, right? I always have a brief outline on what's going to happen, what should be the market profile, and from there I work inside every single day to find out where the price is going to go. Right, so this is how I break down the, or should I say, as ICT says, top down analysis. Okay, from the monthly to the weekly to the daily, and I think lowest to the hourly. Right, if you're projecting 1 week's worth of movement, okay, 1 week's market profile, and of course following the next week, every day you have to forecast. I think based on the 15 minutes chart, that should be enough. So the 15 minutes chart should be the one that you should be forecasting on every single day, right? And from there you find your daily bias, and of course keeping in mind that you have the weekly bias as well. Okay, so yeah, that's about it for today. We shall see how this plays out next week. Okay, next week is gonna be a big week, right? And from there, I think next week should set the tone for the rest of the quarter. Okay, we might just be bearish for the rest of the quarter. I'm not too sure because we do have relative equal highs that are not purged on the E-mini contract, the micro contract. But I think for the E-mini contract, it purged, yeah, as you can see over here, it purged the top here, the high here on the daily. Okay, so not too sure, not going to guarantee anything, but overall we're still in a downtrend. Okay, on the last quarter of 2022 we had some consolidation here, and I think we're going to continue down because I currently do not see any reference points that I can use for the price to want to go up. So far it has been quite efficient on the monthly chart. Okay, so efficient in terms of delivery wise, price delivery has been efficient on the monthly chart. That's why I do not expect any rallies in, I think, quarter one. Yeah, I do not expect to see any form of rallies in quarter one. That is what I'm thinking. Okay, I may be wrong because I have to see how the candles print moving forward into February. Then from there we can get the true idea, because February will be the middle month of the contract itself. Contract lasts for 3 months: January, February, and March. Okay, yeah, that's all for now.